Hello everyone, Jambo. Welcome again to Kurgatari Finance and Accountancy Tutorials. Today we are going to continue with our previous illustration on preparation of subsidiary books, and we looked at an example here. There is a question that we are attempting and we left it at this point. So today I want us to continue the same, finish it, and then we close off these accounts. And remember, if you're not subscribed to the channel, please do so. Also like, because that motivates me to work even harder. Don't forget to share with as many friends as possible so that you can all get benefit, right? Also, if you have a question, kindly put it down in the comment section, or you can contact me via the contact details I've provided in the beginning and the end of the video. So without much ado, let's go straight to where we left. We left at March 6th, whereby transactions were credit purchases from Motor, 5,000 shillings, and we said 5,000 shillings, 600 being the discount. So before you determine where to write the 5,000 shillings, you must ask yourself, is there a trade discount that maybe was allowed to Mike Mickey? So there was. So the discount was 12%, trade discount. 12% of 5,000 was 600, right? So 5,000 minus 600 is equivalent to 4,400. And then there was another credit purchase from Mingi, 4,000 shillings. And there was a trade discount of 12%. So we are going to adjust that. Mingi, 4,000, you adjust 12% trade discount. 12% of 4,000 is 480. 4,000 minus 480 is equivalent to 3,520, isn't it, from your calculations? So let's move on now from there. We had Morage again, credit purchases from Morage, 3,000, and in this case, 12% was allowed, right? So before you decide whether to write the 3,000 on the details column or the amount column, you ask yourself, was there a trade discount? If yes, you must adjust for trade discount here at the details column before taking the final net figure to the amounts column. So we have Morage on that 6th. We have Morage 3,000 less 12% trade discount. 12% of 3,000 is equivalent to 360. This is how you less in accounting. So 3,000 minus 360 is equivalent to 2,640. Please check your calculations. So then we move on to March 8th. March 8th, we had credit purchases from James, 6,000. We had John, 5,000. And Juliet, 4,000. But in this case, you can see there is no adjustment for discount, isn't it? So here, we are going just to enter the figures, or rather the figures as they are, but credit purchases in the purchase journal. So that is March 8th. We have James 6,000. Since there is no adjustment for discount, you take the 6,000 to the amount column, 6,000. Then we have John, still the same case, there is no adjustment for discount, you take the figure on the amount column. Then you have Juliet, no adjustment for discount, the same, you put the 4,000 on the amount column. Then we move on to the next date. On March 9th, there were credit sales to Peter, 8,000 shillings, Patrick, 6,000 shillings, and Patel, 5,000 shillings. Here, there is no discount. So you're going to enter the figures as they are in the sales journal, because these are credit sales, isn't it? And I told you a sales journal records credit sales alone. So you're going to say Peter 8,000, that is March 9th, Peter 8,000, but not on the details column because there is no adjustment for discount. So you write the 8,000 on the amount column. And then you have Patrick on the same date. Patrick 6,000. There is no adjustment for discount. And then you have Patel. Patel is equivalent to 5,000. There is no adjustment for discount. So I want to believe you're understanding these things. It's very easy. Just entering. There is no concept of double entry, isn't it? So we move on to March 18th. Mike Mickey returned goods to Moto worth 500 shillings, to Mingi worth 400 shillings, and John worth 500 shillings. So this is Mike Mickey, which is the business organizer, or rather the sole trader, returning goods that he had purchased, isn't it? So he had purchased these goods. So since he is returning them, are going to be recorded in a returns, or rather purchase returns journal. So we have Mike Mickey return goods to Moto worth 500. But before you write the 500 on the details or amount column, you should ask yourself one question. When Mike Mickey was purchasing these goods from Moto, did Moto allow a discount to Mike Mickey? So let's move on to March 6th, where the Mike Mickey purchased the goods from Moto on 5,000, and he was allowed a trade discount of 12%. So in this case, also when returning these goods, we must adjust for that discount. Are we together? So this is where most students normally fail. And so this is how to enter. You say March 18th, we had Mike Mickey return goods to Moto. So we have Moto. Details, we write the 500, but we are going to say less. Moto had allowed 12% discount to Mike Mickey. 12% trade discount. 12% of 500 is equivalent to 40, right? 40. 500 minus 40 is 460. I want to believe that's the exact figure. And then also Mike Mickey return goods to Mingi. We write the same date, Mingi. Before you decide where to write the figure of 400, either on details or amount column, you ask yourself, did Mingi allow discount to Mike Mickey? We move to where Mingi had sold goods to Mike Mickey. So Mingi had sold goods to Mike Mickey, but there was an adjustment of 12% trade discount. So you're going to write the 400 goods worth 400. You less the 12% trade discount. 12% of 400 is equivalent to 48. Sorry. 400 minus 48 is equivalent to 352. Isn't it? From your calculations. And then also, Mike Mickey returned goods to John. John, on the same date of 18. John, how much? 500. But before you write the 500 on the details or the amount column, you ask yourself, did John allow discount to Mike Mickey? We move to where John had sold goods to Mike Mickey. So John sold goods worth 5,000 to Mike Mickey, but there was no adjustment for discount. So in this case, you are going to enter the 500 directly on the amount column. So I want to believe you are seeing the difference, isn't it? Where the discount was allowed before and then the goods are returned. Are we together? So you write the figure of 500 on the amount side. Sorry, 500. And then March 23rd, goods returned to Mike Mickey. So these are the people whom Mike Mickey had sold goods to. So Mike Mickey is returning goods of 500 to Jack and Patel. But these goods that are returned into the business are known as sales returns, and they are recorded in the sales returns journal. So let's move on to the first person, known as Jack. Jack, so that is March 2020 to March 23rd. We have Jack returning goods worth 400. But before you decide on whether to write the 400 on the details or amount column, you ask yourself, Did Mike Mickey allow discount to Jack? Move to where Jack was sold goods by Mike Mickey. That was March 1st. So Jack was sold goods by Mike Mickey, but was allowed a discount of 10%. Still, when returning these goods, you are going to show the discount. You adjust for the discounts of those goods that have been returned, and then you take the resultant figure to the amount column. So it's as easy as this. You write the 400 here, and then you less 10% trade discount. 10% of 400 is 40, right? 400 minus 40, 360. And then you have Patel on the same 23rd. Patel was sold goods by Mike Mickey. You go to where Patel was sold goods. Patel on March 9th, Patel was sold goods worth 5,000, but there was no discount allowed. So you're going to write the 500 right on the amount column. So let's move on to our final part, that is March 25th. Credit sales to Mwangi, 6,000. Credit sales, you go to the sales journal. On 25th, sales to Mwangi, 6,000. There is adjustment of 10% discount. So 6,000, you less 10% trade discount. 10% of 6,000 is 600. 6,000 minus 600 is 5,400, isn't it? And then also credit sales to Milka on the same 25th. Milka sold goods worth 5,000, subject to 1,000 trade discount. So in this case, we are not dealing with percentages, but we've been given a round figure of discount. So it's a little bit easier, right? So you write 5,000, you less trade discount of 1,000. 5,000 minus 1,000 is equivalent to 4,000. And that's the end of our question. So what is left with us is we add up. Are we together? We add up. So let me show you how to add up. So the column that you're going to add up is the amount column, whereby you have adjusted everything. So you put one line on top and then two lines down here. Are you together? So you get a total of all these. The total of 4,500 through to 4,000 is equivalent to 39,200. So this figure is known as total credit sales. I want to believe that's clear, isn't it? So let's move on to sales returns journal. Totals, put one line on top and then two lines down here. 360 plus 500 is equivalent to 860. So this one we're going to call total sales returns, or you can say the total return inwards. Are we together? Then we move on to our purchase journal on the other side. You put one line on top and then two lines bottom. So the total of purchase journal on the bottom, you put one line on top and then two lines at the bottom. So the totals from 4,400 through to 4,000 is equivalent to 25,560. So this figure is known as total credit purchases. Total credit purchases. The same case applies to this other side. One line on top and then two lines bottom. 460 plus 352 plus 500 is equivalent to 1,292. So this figure is known as total purchases returns. So you can see how simple preparation of the journals are. So there is one part that maybe I should tell you, and I left this one intentionally so that I can tell you at the end of showing you how to enter these figures. There is this part, this column of ledger folio. So ladies and gentlemen, I want to believe that you still remember when I was introducing the accounting books, and I told you that the principal books are divided into two, the personal ledgers and the impersonal ledgers, as far as the ledgers is concerned, right? Now I want to believe that you still remember that I told you the ledgers are divided into two, the personal ledgers and impersonal ledgers. You went further and told you also that the personal ledgers are divided into two, the sales ledger and the purchases ledger. Do you still remember that? Okay, good. So, and I told you the sales ledger contains the accounts of the debtors in the organization, contains the accounts of those customers. Are we together? And I also told you that the purchases ledger contains all the accounts of the creditors in the organization or the suppliers. Are we together? That is what I told you. And I told you also that an account is a page in a ledger, isn't it? I've told you that the sales ledger contains the accounts of debtors, and I told you that an account is a page of a ledger this way. So I don't know why I grab. I told you that if this is a ledger, this is our ledger. I told you that inside this ledger there is an account. This is a page of a ledger. I told you that in a page of a ledger, there is an account inside, which has got two sides. The left-hand side is referred to as a debit, and the credit side, or rather, the right-hand side is referred to as the debit, the credit. So this is what is known as an account, whereby in that account, maybe in that page of a ledger where an account is contained, we have an account of Jane. Another page, we have an account of Jack in that sales ledger. And then in another page of that sales ledger, we have Josephine's account. And then in another page of the sales ledger, we have an account of Peter as we go through up to Milka, isn't it? So this is how the ledger folio works. Let's say Jane is a debtor in this case, and an account of Jane is found in the sales ledger, maybe page 1. Are you getting that? An account of Jane is found in the sales ledger, page 1. So that is the ledger folio. You say, maybe, for example, you say under sales ledger, page 1, we have an account of Jane. Under the sales ledger, page 2, we have account of Jack. Under sales ledger, page 3, we have account of Joseph. Sales ledger, page 4 for Peter. Sales ledger, page 5 for Patrick. Sales ledger, page 6 for Patel. Then sales ledger, page 7 for Mwangi. And then sales ledger, page 8 for Milka. I want to believe that is clear. So let me explain for purchases journal so that you get to understand it better. I also told you that in the purchases ledger, one page of a purchase ledger contains an account of a creditor, isn't it? And that one page, let's say the first page in the purchase ledger, is an account of our creditor, Moto, isn't it? So you can say under the purchases ledger, page 1, we have an account of Moto. Are you getting that? So that Mingi, under the purchases ledger, page 2, we have account of Mingi. And then purchases ledger, page 3, we have account of Morage. So it's as simple as that. Are you getting the logic? And then James, the purchases ledger, page 4, James, the purchases ledger, page 5, account of John. And then lastly, the purchase ledger, page 6, account of Juliet. Are we together? So this one will make it simple for an accountant to do what? To locate where Juliet's account is for future entries or future transactions that Juliet will be doing with the organization. Then you come to sales returns journal, the ledger folio. So the ledger folio for sales returns journal will take the folio of the sales journal, or rather the sales ledger. So let's move on. Jack. In sales ledger, page what? Sales ledger, page 2. There is an account of Jack, isn't it? So all entries of Jack will be entered in sales ledger, page 2, where the account of Jack is. So Jack, we have sales ledger, page 2. Are you together? And then for Patel, you come to where Patel is. Under the sales ledger, page 6, we have an account of Patel. So sales ledger, page 6. So this one is simple. This one is as simple as 1, 2, 3. The account of Motor is in purchases ledger, page 1, isn't it? Good. Purchases ledger, page 1. And then for Mingi is purchase ledger, page 2. Purchase ledger, page 2. Then for John is purchase ledger, page 5. And that is how to do the ledger folios. Are we together? So ladies and gentlemen, I have tried as much as possible to simplify the concept of subsidiary books. We have also checked at a comprehensive illustration, and I have shown you how to enter the same in the respective journals. So in our next sessions, we shall look at the ledgers and the cash book at length. So I will stop at this point for the subsidiary books. So ladies and gentlemen, if you have not subscribed, please do so. Like, share, and comment. So thank you very much. May God bless you. And until next time, is goodbye for now.